Let me also go across to Harsh Roongta, who's joining us here on the broadcast as well. Thank you very much, Harsh, for speaking to us. Obviously, as far as the common man is concerned, the Aam Aadmi is concerned, this direct impact of this is going to be rising EMIs at this point in time. While, of course, the effort is to curb inflation, but the fact that EMIs will become more expensive is the biggest factor for the common man.
And that, and of course, even the fixed income, fixed deposit rates would go up for the depositors. So, I mean, interest rates is always a two-sided coin, isn't it? What is bad for the borrowers is good for the depositors, and vice versa. So, I mean, the fixed deposit holders so far were not having, or the fixed income investors were suffering with negative returns when inflation went up. And I think it will get corrected to some extent after this rise. I think the banks will banks would have to offer better rates on fixed deposits. And obviously, I think since a lot of the floating rates are linked to repo rates, those would rise almost automatically. So in terms of home loan, etc., that would rise automatically, and the fixed rate car loans or personal loans, etc., would also be revised, I would suspect, pretty quickly.
Yes, and this time also, Harsh, we saw some of the banks, hiking the interest rates before the RBI's rate hike actually came in. It was a smaller amount of 5 and 10 basis points that we saw by many banks. Do you suspect now that banks will have that leeway to go ahead and, do a significant rate hike?
So if you're talking loan rates, as I said, floating rates, lot of the floating rate home loans, if you're talking home loans, a lot of the floating rate home loans anyways are linked to repo. So they don't really have to hike. And the effective rate itself becomes, so if somebody is 2.5% or 2.75% above repo, it was 4 plus 2.75, so it was 6.75. And now, when 4 has become 4.4, it will automatically be 2.75 above 4.4, which will take it to 7.15. So, the hike is automated in that sense.
Yes, absolutely. And Harsh, any advice at this point in time for anyone looking to sort of take a loan at this point and probably worried about the interest rates, and now this is going to be, of course, a rising cycle that we are getting into?
So I think clearly we have to become comfortable with fluctuating interest rates. And I think that is something that you have to be resigned to. So I think the only advice I can give is just be comfortable with fluctuating interest rates. Keep a cushion in your budget while deciding, let's say buying a major purchase like a home. Keep a cushion for the fact that your EMIs might rise, at least during some part of that long 15, 20-year period. So you should keep some sort of a cushion for that and not, cut it too fine. That I suspect is the only thing that you can do, because I think fluctuating interest rates is a fact of life. I think all of us need to get comfortable with it.
Yes, absolutely. Harsh Roongta, thank you so much for joining us with your perspective on this big move.